Hey everyone, today I'm interviewing David Kimmer. He's a lender I work with. He's going to be sharing some strategies on how you can pay less for that mortgage that you might be about to get. Well, hey everyone, here we are with another Zoom interview. And today I have with me David Kimmer, who is with Finance of America. He's been a lender for about 22 years. And here we are just beginning the last quarter of 2022. And it's no secret that rates are very difficult to deal with. Prices have not really come down like many said or thought that they would. And so now we're dealing with still kind of a shortage of inventory in the real estate market. We're dealing with prices that are also high, very high historically. And also we're coming back into what may have been normal historic rates, but that are really high comparatively. And the payments that many people are facing when they get pre-approved are really difficult. So today, we're going to be talking about some strategies to lower your payment, how to make things more affordable. We've been so used to an extremely hot market that a lot of these strategies haven't been really needed or even thought about. So David's going to be sharing some things and we'll be having a discussion about that today. So thanks, David, for joining me. I'm excited for this conversation.
Me too. I appreciate you having me on today, and I'm excited to talk about it.
Awesome. So basically, let's kind of jump in from your perspective. What's going on? Where are we right now?
Well, the bottom line, Daniel, is that rates have gone up considerably since the first of the year, and those high rates have driven up payments, and they're basically pricing a lot of people out of the market. So, the home sales have softened because people aren't wanting to do that. And some of it's a mental barrier of how high the rate is. And some of it's an actual financial barrier of how much, they can afford and how much they can get approved for. And so what we're seeing is a lot of people are having a hard time purchasing homes today because of the high interest rates.
So what are some things that you found through this that have worked to make this more palatable or even affordable for people?
So this is a 30-year fixed rate interest rate chart. And I just want to kind of point out that historically, rates have been higher than 5%, going back to about 2008. Prior to that, rates were typically over 5 and in some cases over 10. And so, historically healthy market, you're going to see a higher interest rate. And I would just say that a lot of the people that are in the market, especially some of our first-time home buyers that are 30 years old or less, just are not accustomed to seeing these high rates. But you can see what has happened since the first of the year. And actually after last week's Fed meeting, rates have gone up even more, and they're really close to 7.5%. So if you track that back, we have to go all the way back to around the 2008 recession to see rates that high. And that is the problem that we're facing in today's market.
Yeah, it looks like even getting back into the 90s almost.
Yeah. Yeah, it goes way on back. I mean, so, basically we're seeing rates that are at almost a 20-year high. I guess this would be 2002, excuse me, not 2008. So it's about 20 years ago. It was the last time we saw rates this high. And so people are in the market are trying to reduce the price. And my message is there are better ways to, reducing the price isn't the problem. The rate is the problem. The payment is the problem. And we have to come up with strategies to help people reduce their payment and their interest rate. Does that make sense?
Yeah, it does.
So I've created a presentation, and I just want to start with kind of our baseline. And by the way, I want to say I created this presentation back on August 18th. It's now September 29th. Rates have gone up a lot since then, but the concept doesn't change. Okay, rates can go up, rates can go down. This concept isn't going to change. So my basic assumption in this presentation is that you're purchasing a home in the $600,000 range. $600,000 is basically the median home price in Washington County. You're putting 10% down, and your credit score is above 740. So if that's the case, we have a $600,000 purchase price, a $540,000 loan amount. At that time, the interest rate without paying any points was 6%, and your monthly payment would be just under $3,900. and you would need about a little over $75,000 cash to close, including your closing costs and prepaids. Are you with me?
Yep.
So let's say that you went into that home and you were negotiating with your realtor and you decided that you wanted to make an offer $18,000 under the asking price in order to save yourself some money. So you still have a 6% interest rate, and now your payment has gone down to $37.94, which is about $100 a month savings, which, you know, saving $100 a month is nice, but I think there are better strategies to help you save a lot more money. So what would happen if instead of going in and negotiating a price reduction, you go ahead and make your offer at the 600,000, but you ask for a 3% seller concession, and you use that $18,000 to permanently buy your interest rate down to 4.75%. If you're able to do that, you're going to lower your payment to $34.73, and that is a $420 per month savings. So an $18,000 price reduction saves you $100. An $18,000 seller concession on the same transaction saves you $420 a month. That's a 400% improvement over just reducing the price.
Yeah, that's significant.
Huge, right?
Yeah.
So let's be the devil's advocate and say that, you know, you're looking at this property and your buyer's agent is saying, you know what, they're not going to drop the price. We've got to go in. They want to net $600,000 out of the sale of this home. Well, then another alternative would be to go in and offer $618,000. You're still going to ask for the $18,000 seller concession. So the seller is still going to net $600,000. You're going to be able to buy the interest rate down to 4.75%. And now your payment is $35.77. That is a $315 a month savings. Now that is not as good as the $420 a month savings, but it's still over 3 times better than just dropping the price.
Right.
Now, at this point, a lot of people are going to say, well, gosh, Dave, what if the property doesn't appraise for 618? Well, here's how this works. If you're putting 10% down, your loan to value is 90%. You can go up to a 95% loan to value without it affecting your rate. Your monthly PMI will go up a little bit, but that's all that'll happen. So if your loan to value goes up to 95%, that means that property could appraise as little as $586,000, and you don't have to bring in a dime extra. Your loan to value is going to go up, and your PMI is going to go up. In this case, if it came all the way in at 586, it'd go up $38 a month, but you're still saving $280 a month over the original concept of going in and just asking for a price reduction. So it's still 2.8 times better.
Right. And now you said there at the bottom, if people don't understand, because this can be completely foreign language to some people of, okay, how does this appraisal gap work? What does all this mean? Why is it necessary? Which would be kind of a separate conversation from this, but just, I think that is a good point. Reach out to either myself, or I'll happily pass along David's information to you to reach out about how that works and why that is important. Suffice to say, it's a very significant tool and one that many people honestly just don't think about.
Or don't understand.
Right.
So, you know, and then Daniel, you asked the question previously, how much would you have to lower the price in order to get the payment down to the same payment that the $18,000 seller concession is going to give you? And the answer is you'd have to drop the price to $535,000 in order to get your payment in the same area as that $18,000 seller concession. So, you know, it's very obvious that, again, the problem that we have in the market today is high interest rates. And just by structuring your transaction a little bit differently, you're able to drop your payment, you're able to lower that rate and drop your payment, which opens up a lot more opportunities for both the buyer and the seller, because this strategy works on the listing side and on the buyer side. And I just want to add that rates have gone up since I did this presentation. And so now we're to the point where even going over to an adjustable rate mortgage rather than a fixed rate is a good strategy. But most of those adjustable rate mortgages start with points. But if you're able to get that seller concession, we're seeing in many cases a rate difference of a full 2% between the 30-year fixed rate and the adjustable rate mortgage with the seller concession. The one I ran this morning, it was a $750 a month savings.
Wow. And that's an interesting point, because some people have been, I've heard some people mention about, well, let's just wait, get in, lock at the higher rate, and then, a little bit down the road, interest rates will drop and we can refinance. What would you say to that strategy?
Well, I agree with that. And even especially with the ARM, but none of us have a crystal ball. I do expect rates to start dropping as we roll into the fall and winter, but we don't know what rates are going to do. I do think a 7-year ARM is an effective strategy. And if I could get a 5.375 rate, that means we probably want to see rates down in the mid fours before you're going to want to refinance that. And most likely that is going to happen within the next 7 years. But, home values are going to continue to go up. So I'm trying to come up with a strategy to help people buy homes today and be able to take advantage of that home appreciation, which is the magic elixir that, the magic of owning your own home is that appreciation.
Right. No, that's great. I appreciate you kind of explaining this. And I think the visual is great too, to be able to see some of those charts and graphs and see the numbers. And it's kind of an abstract thing many times in people's minds of, okay, well, sure, you can buy down rates if people are even aware that you can do that, but not necessarily understanding the power of doing so.
Yep. Yeah, it's a powerful strategy. And I would love to educate anybody that would like to know more. Bottom line is the market's strong and it's going to continue to appreciate. And I think that if you can buy a house today and if you can afford the payment today, you should buy the house today. Property will appreciate and we will be able to get a lower payment in the future.
Yeah, no, this is actually really good, because a lot of people right now are priced out of the market, that they want to buy, but they can't. But this seems like a strategy. And what you were saying just a second ago is that if you can buy the house, now's the time to do it. And exactly. Don't gamble with the future, because we don't know the future, but these are ways that you might actually be able to get into the market right now. And this could be your only option to do so.
Well, as you and I have discussed before, that for those of you that want to wait for rates to go down, when rates do go down, and they will, then the market's going to be more competitive again. Right now, you have an opportunity to get in and buy a house. You have an opportunity to negotiate. You have an opportunity to get a seller concession, and it's a great opportunity to buy a house. Exactly.
Well, thank you, David, so much. How can people reach you? I think you just had it there. So people can just rewind the video and go right to David's information, which was right there. And I know I've had many conversations with David. He is more than happy to explain all of this in much more detail. So Thank you, David, so much, and really appreciate your time and going through this with all of us.
Yep. Thank you, Daniel. I appreciate it.
Hey, everyone. I hope you enjoyed that video and learned something new. If you have any questions for me or for David, you can reach out and ask, and I'd be happy to help you. And I know David would as well. So thanks for watching. If you want more videos like this, feel free to leave a comment in the comment section below. Also like this video and subscribe so that you don't miss all of the great new videos we have coming out.